Hey everyone, is Amazon or Shopify the better stock to buy today? That's the question I'm going to answer in this video, comparing these two companies across revenue, cash flow, operating profit margin, and their valuation to determine which one is the better investment for long-term investors today. So let's start with revenue. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So, of course, Shopify is growing revenue faster than Amazon. And you can see this over the last 5 years. The revenue growth rate for Shopify has consistently been larger than that of Amazon. And in the most recent quarter, Shopify nearly doubled Amazon's revenue growth rate at 23.41% compared to Amazon at 12.53%. This is likely to continue for several reasons. Firstly, Shopify generates or operates a more asset-light business model, which allows it to grow more unconstrained, whereas Amazon is a very asset-heavy business model, capital-intensive business model. For Amazon to generate growth, it needs to invest billions of dollars in expansion. That's not the case for Shopify. That's the good news. The downside is that Shopify doesn't generate as strong or as good a profit margin as Amazon, which I will share with you over the coming slides. So the next metric I was comparing these two on is cash flow from operations to sales. And you'll notice that in this metric, Amazon is consistently ahead of Shopify. And most recently, that was 16.78% compared to 14.6% for Shopify. Now, this is likely to continue in Amazon's favor because Amazon's driving two businesses specifically that are really boosting its cash flows. And that is the advertising business, which is incredibly lucrative, very high profit margins, very little incremental investment needed from Amazon's point of view. And then secondly, the Amazon Web Services, the cloud computing segment, where the artificial intelligence services are housed, are reaccelerating now. And that segment is incredibly lucrative as well, with high profit margins and good cash flow from operations. So those two growth drivers will boost Amazon, while Shopify, primarily in the e-commerce, it thankfully reversed course on its investments in logistics. For a moment there, Shopify invested several $billions trying to develop the similar logistic service that Amazon offers, allowing merchants on its platform to offer shipping and handling and all of that, right? But that's really expensive. That's really capital intensive. And you would be competing with the likes of Amazon that's already spent hundreds of billions of dollars developing its network. So you're not going to get similar performance, anywhere near similar performance as Amazon can deliver in shipping and handling, but you're going to be spending billions of dollars trying to offer that service. I didn't think it was a smart move from Shopify, and thankfully they backed away from that and they sold that part of the business. Even though they still own an equity stake in the business that they sold it to, they didn't get very much cash. They got more equity than cash. But I thought that was a blunder from Shopify. Thankfully, they reversed course. But Amazon has done an excellent job with its logistics network. It's finding ways to improve that. It's found an area which is very rare, which is a way to lower your cost and improve service to customers. You can't find those types of opportunities very often in business. But Amazon with the logistics has found one. And that is getting closer to the customers, which improves service because now customers can get their items faster. But at the same time, it lowers Amazon's cost because the items travel fewer distances as they would before when they're closer to the customer. So it's a win-win situation for Amazon. That's rare. That's been boosting Amazon's cash flows and profitability ever since the company made investments during the pandemic in a kind of rush because it saw its business absolutely surge following the pandemic and people shopping from home. And now as it has had time to digest those investments and optimize those investments, they're really bearing fruit, and it's really showing in Amazon's results. Speaking of operating profit margin, you'll notice Amazon has consistently delivered a better operating profit margin than Shopify, save for a brief moment here after the surge in 2020. Shopify eclipsed Amazon and then went right back down after it decided to make those billion-dollar investments in logistics. Amazon has been increasing its operating profit margin steadily since 2015, where it was like 1%, and now it's all the way up to 8%. Now, Amazon is never going to be one of those companies that generates operating profit margins of 50 or 60%, but I believe Amazon can reasonably expect to improve its operating profit margin maybe to the low double digits as advertising and AWS continue growing, that part of the business taking a larger share. And then the e-commerce segment, as it's growing, it's demonstrating economies and scale. And even the international segment that was losing money for several years has now turned the corner and is now profitable. So Amazon can continuously improve there. Shopify, however, I think can surpass Amazon in terms of their operating profit margin. I think they can go well beyond Amazon. I think Shopify has the potential to get into the 20, 30, 40% operating profit margins at a large enough scale if they continue this asset-light business model, if they keep themselves from the temptation of investing in logistics. If they go that route, if they go into the logistics route again, their operating profit margins will be, lower than Amazon. But if they continue this asset-light path, then I think longer term, their profit margin will surpass Amazon's if they continue outgrowing Amazon and demonstrating. You see this improvement here. The operating profit margin is bouncing back ever since they sold off that segment. They've recovered those losses they experienced here. And given the asset-light nature, they will exceed Amazon, maybe 3 years from now, maybe 5 years from now. The timing is uncertain, but given the different business models, Shopify has better potential in that metric. Finally, I wanted to compare these two on valuation. And according to the forward price to earnings ratio, Shopify is roughly 50% more expensive than Amazon. It's trading at a forward PE of 47 compared to a forward PE of 31 for Amazon. For me, Shopify has not earned this much of a premium valuation. I would not want to pay this premium. If I had to pick between these two, I would pick Amazon as the better stock to buy today. And I fully acknowledge that over the longer term, Shopify's business has the potential to earn better profit margins. I'm just not certain that's a 100% probability. I'm not certain that Shopify will not get tempted again to make investments in logistics and fulfillment and other areas. And so as it is now, Amazon management has demonstrated to me very good skill in managing the business, dealing with the unprecedented circumstances of the pandemic. And the cloud segment and advertising segment is icing on the cake to the e-commerce business that's likely to continue growing, all of which together will boost the company here. So if I had to pick, I go with Amazon. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.